At the beginning of the trading session, there was just few negative news. Thus, the ruble and oil began the day in the red zone. Their volatility may increase. Moreover, the US presidential election is approaching, thus causing more and more discussions of sanctions against Russia. This, in its turn, may spoil investors' sentiment. Nevertheless, there are no reasons to say that the sanctions will be imposed in the near future. At the beginning of the trading day, global oil prices dropped after an advance of 2% logged yesterday. The rise was triggered by the data revealed by the US Energy Department and the OPEC Plus deal. According to the report, the US oil reserves showed a decline. However, most oil producers are planning to increase oil output amid mounting demand. Global oil production may jump by 2 billion barrels a day from August. Markets have positively reacted to the fact that the OPEC Plus deal was winding down. This proved that global oil demand is improving, thus boosting oil prices. Brent futures with the delivery in September were valued at $43.50 per barrel, that is 0.46% lower than yesterday. At the same time, the WTI futures lost 0.75% to trade at $40.80 per barrel. Yesterday, oil prices entered a strong resistance area. Today, prices will hardly change. Thus, Brent crude is likely to fluctuate within the range of $40–44 per barrel. Early today, the Russian ruble was under pressure of the declining oil prices. Besides, it was influenced by falling emerging market currencies. Thus, the dollar-ruble pair moved above 71 points. In case of bad news, the US dollar may continue climbing. However, today it will hardly leave the range of 70–75 rubles. The US dollar needs a strong driver to test the level of 73 against the Russian ruble. A sharp escalation between the US and China weighs on risk and commodity assets. Moreover, investors are extremely disappointed by the Chinese GDP data. The Russian ruble is locally supported by the tax period that began today. Moreover, the Bank of Russia will hold a meeting in the near future. Thus, investors are expecting further easing of the monetary policy. The ruble bond market remains attractive and it's likely to be resistant to the deterioration in the external background. That's all for now. Thank you for watching and have a nice trading day. Bye.